Hello and welcome to this week's weekly video featuring Tom's Tools and yours truly, Mike Wade. Disclaimers: stock and options trading has large potential rewards but also large potential risks. You must be aware of these risks and be willing to accept them in order to invest in the stock and options market. You can actually lose trading, as you know, and you should not trade money you cannot afford to lose. Also note that I'm not an investment advisor. Please don't construe anything that I'm about to share with you as investment advice. And all prices are in US dollars unless noted otherwise, and feel free to read the balance of the disclaimer at your leisure. All right, so if you've been watching the market, and I'm sure you have, you've noticed that the market is extremely volatile, right? So it looks like it's heading down. Well, certainly it has been heading down. It's dropped 11% or so in the month of October. There's been some whipsaws, though, during this down decline, and it should raise the question, how far is the market going to drop, and when, if and when it does actually bounce, how do you protect yourself? So we're going to be doing that. We're going to be looking at how to avoid getting whipsawed in this volatile market. We're going to be scanning for the market's biggest ATR movers using the average trading range ranker. ATR was developed by James Wilder, and it is a really good tool for, and another way to find big moving stocks. So the idea here is we want to find the biggest moving stocks in this volatile market. Then we're going to talk about this is another opportunity for us to straddle. So we'll take a look at straddling these ATR movers with an eye on slippage. So let's take a look at a chart of the SPY. This is the S&P 500 ETF. And you can see here that since the start of October here, the market has really been moving down to the downside. All right, over 11% drop. As of yesterday or today. Today's the 30th of October. And you can see here that we've had some really big moves down, and then a couple of a move up here, and then some more big moves down, a big move up, big move down, big move up. This is similar to riding a bucking bronco, right? So the market is volatile. It looks as though it's going to continue to drop, but we just don't know for sure which way it's going to happen. So here's the issue. If the market does in fact bounce, when it does, because it will eventually, and maybe it does so just for a few days or even one day, how do we avoid getting hurt? All right, so that could happen. If you go short this market or buy puts in this market and the market bounces, then you could lose money. All right, so this video is about how you can actually trade that possibility, eventual probability, in a way where you can make money either to the downside or the upside. If the market continues breaking down, you'll make money, and if the market bounces, you'll also make money. So that's the idea. How do we do that? We do that with a straddle. And what I want to do in this video is, using the ATR ranker, let's find the biggest bucking bronco stocks in this crazy bucking bronco market. So let's find the volatile of the most volatile of the volatile, we could say it. All right, so we're going to use the average true ranker for that. And what you do to access it is you go to stocks, stock rankers, and then average true range. Really easy. You'll notice here that there's only four wizard criteria. The one I'm interested in is I want to find the stocks with the highest average true range. These are the ones that move around the most. All right, so that's how we're going to do it. Also, you can look for, with this wizard, you can look for the lowest moving stocks, the lowest ATRs. You can even compare the ATR to standard deviation to rank them in a more efficient fashion. In this case, though, I'm just going to keep it simple. If you want to know more about the other selections here, just hit the help button here. And we have help in every part of the tool set, and you can dig in and figure out if you want to try some of these other ones. I want to scan on the S&P 500, which is the institutional playground. I'm going to hit the search button. And then what I'll get back in return is the stocks ranked by highest average true range. In other words, the stocks at the top of the list are the biggest bucking Broncos stocks. All right, so we have Netflix on the top of the list. You can access the chart, the picture, the news, the stock price, volume. We have the high ATR and the low ATR over a 14-day range. All right, that's the default Wilder average used to calculate ATR. So over 14 days, the highest move in the stock has been 19, and then 11 on the low side. The difference between the two is 823. But really, the average move over 14 days on this stock is 19.31. This stock moves 19.31 dollars over a 14-day period on average. All right, so that's really good. Now, from here, so all of these are good. So they're ranked in the biggest movers to the least. So how do you create? Well, there's a couple of ways. I've shown you how to go into searchers, single strategy, and then click straddle. But another way to do it, just to give you a bit more experience, is from this result set, I can click on the stock symbol, and that will pop me directly into the option table. All right. So from here, I can just basically select my options. Now, with a straddle, I'm interested in 60 to 90-day options. All right. So if I look down the days to expire, I can see here that there's 80-day options. That's perfect. So I'm going to select 80-day options and then click update. And then I'll only be looking at the options that I'm interested in taking. So the stock price is shown here, 288.72. I have my puts over here to the right. You can see that there. And I have my calls over here to the left. And then under trade num is where I can actually select my options by typing in a number. Now, notice the stock price is at 288.72. The closest strike is 290. Now, 285 is further away. So what I want to do to make an ATM straddle, at the money straddle, is I'll buy a 290 put and I'll buy a 290 call. I'll hit my risk graph button, and then back comes a nicely centered straddle on Netflix. All right, that's beautifully centered. I'm not going to give you a straddle lesson right now, but this is a good straddle. Now, let's talk about one thing. This is really critical, particularly in this volatile market. You need to make sure that your option slippage is no higher than 10%. So how do you figure that out, you might ask? Well, that's a good question. Here's how you do it. Notice here that we've got the ask price of $27.20. All right, that's what you'd pay for the option, for this, in this case, the call option. All right, the bid price is $26.05, and that's what you could sell it for at natural price. So the difference between the bid and the ask is what's called slippage. All right, so if you look here, our slippage is what? $1.15. The difference between $27.20 minus $26.05 is $1.15. If I divide $1.15 by what it would cost me to buy it, that would be my slippage. In this case, it's 4%. All right, so that's certainly less than 10%. You'll find the same behavior down here in the puts. So this particular straddle does match up with the 10% maximum slippage rule. This one is a go ahead. You'll also notice that earnings is in the background, and I'll talk about that next. Let's understand how to trade straddles in this environment. So I've got a slide to show you how to do that. So first off, using the average true ranker, you select highest ATR, and then these are the straddle entry and exit rules. The first thing is you buy an at-the-money straddle. Be sure that you enter 15 to 75 days before the earnings announcement. All right, what does that mean? Well, don't get in right after the earnings announcement in case the volatility is high, the implied volatility is high, and take it into the earnings announcement. You may choose to hold it over, really use 60 to 90-day options, exit with a small profit or a small loss. You can change that around a little bit. But really the idea of this thing is that you can continually stay in straddle. So as soon as you make 25%, sell that straddle, and then you may choose to go back to number one and just stay in the game. Remember that these are the most volatile stocks, the bucking Bronco stocks, and if their history repeats, they'll keep moving, and you can essentially stay in this process. All right, and you might have several of them going on at once. So 25% profit isn't a lot, but remember that you can keep doing it. So as soon as you sell a straddle, buy another. All right, so that's the idea. And again, make sure that you enter your straddle only if the slippage is less than 10%. I've shown you how to do that. Hope you've enjoyed the video. If you have any questions, reach out to Tom, and I'll see you all next week.